What is going on, guys? Nick here, back with another video. In this video, we're going to take a look at Facebook. I'm going to cover all the things that you need to know if you're thinking about buying stock in Facebook. I'm a self-taught stock investor who's learned fundamental analysis so I can beat the stock market long term. And I'm making videos to help beginners make informed decisions so they can beat the market long term too. So in this video, I'm going to look at Facebook's financial disclosures. I'm going to take a look at their income statement and their balance sheet, and then I'll consider their moat, their future outlook, and if I think that you should buy their stock right now. Let's take a look. So the first thing that we need to take a look at before we evaluate any stock is what does their income statement look like. So here's a chart of Facebook's revenue over the past 10 years. We can see all the way back in 2010, they were making $2 billion, and at the end of 2019, they were bringing in $70 billion. We can see that over the last 5 years that Facebook has averaged 41% revenue growth, and over the past 3 years, Facebook's revenue has gone up 36%. One thing that I think is actually really interesting to notice about their income sheet is if you look at their operating margin. This shows just how cheap Facebook's product is for them to make. So over the past 12 months, Facebook reported $73 billion in revenue and said their cost of goods was only $13 billion, which leaves them with a gross profit of about $60 billion. If you don't know what gross profit is, it's the sales minus the direct cost of its labor and supplies that it needs to produce those goods and services. So this number doesn't include taxes and interest and other expenses that are included with calculating net income. Now if we take a look at Facebook's net income, we can see that it actually grew from 2010 at $606 million to $18 billion in 2019. We can see that this net income number matches the revenue growth pretty closely, and we can take a look here at how much profit margin they actually receive. This is something to pay attention to. While this isn't a hard rule, companies in more secure positions tend to have higher profit margins, so it's at least something to be aware of. If Facebook's business was stressed, I would expect this number to be much smaller. Also, if you notice the last 2 years between 2018 and 2019, you'll see that their net income dropped off from $22 billion to only $18 billion. The reason for this drop-off is because they had to pay a $5 billion fine to the FTC as a result of the 2018 Cambridge Analytica scandal. If we added the money that they ended up paying for the fine back into their net income, they would have ended up with about $23 billion in net income. Now let's take a look at the balance sheet. Facebook reported $138 billion in assets to $33 billion in liabilities. If we subtract the liabilities from the assets, we get $105 billion of total equity. Facebook reported $10 billion in total debt, which means their debt represents about 10% of their equity. This is a very comfortable position, and it's rare to see a company of this size and growth have such little debt numbers. So the last financial disclosure sheet we need to take a look at is their cash flow statement. So we can see that they took in $38 billion in cash from operating activities. They invested $17 billion of that cash, and they paid off $8 billion in debt with the cash. This gives them a net change of cash of $12 billion. Their free cash flow shows of the $38 billion in cash from operations, they spent $14 billion in capital expenditures, which gives them a free cash flow of $23 billion. Now let's take a look at Facebook's moat. Facebook has been in the news for its poor handling of hate speech on its website. Recently, 400 companies from Coca-Cola to Adidas to Unilever said that they would halt advertising on the website for the next year. The CEO, Mark Zuckerberg, has met with civil rights leaders in an attempt to show that he's working to fix the problems with hate speech on Facebook's platform, but the reports out of that meeting were not particularly positive on Facebook's response. This boycott on advertising on Facebook is a problem for Facebook's business, but I'm not sure that it's going to lead to a long-term impact in Facebook's business prospects. If Facebook does a better job of cracking down on hate speech on their platform, I would expect that this will come with some extra costs, such as hiring moderators, implementing software to detect hate speech text on their platform. But I don't expect this to hurt Facebook very much in terms of its profitability because they have such wide margins to begin with. If anything, this could help to depoliticize Facebook a little bit, which seems to be the biggest reason for burnout on the platform from people that I've spoken with. If Facebook does little to nothing to police hate speech on their platform, I still don't expect this to have a big impact on their business long term. The advertising capabilities of Facebook are unmatched by any other platform, and I expect that advertisers will either return or get replaced placed. I used it myself actually for a website that I had created, and I was blown away by how specific of a focus you could narrow down your target audience to. Advertisers obviously want to put their ads in front of relevant audiences who are likely to buy their product, and we've all seen this in action. When we're scrolling through Facebook and that product that we've been thinking about but haven't ever looked up all of a sudden shows up in our newsfeed, and it starts making you wonder, is Facebook reading my mind? Every time I talk to anybody about investing in Facebook stock, the first response I always get is, oh, what if it becomes the next MySpace? I think this is a great question, but I think that there's two very important things to consider. The first thing is if you look at Facebook's daily active users, it's still growing at a really impressive rate. Facebook currently has 1.7 billion daily users as of the end of the first quarter of 2020. And number two, Facebook is way more ingrained into today's society than MySpace ever was at any point. You have to remember what the internet was like when MySpace was popular. There was no pulling your phone out of your pocket and hitting an app and there you go, MySpace. What we had to do was go onto our computers, open the internet browser, type in myspace.com, and if we got up to go somewhere else, there was no updating your MySpace feed, so we were limited in the amount of times during the day that we could actually access MySpace at the time. The way that we switched between apps on our phone from Facebook to Instagram to Twitter to Reddit didn't exist back in 2009. And by the time it did, MySpace had completely gone away. I also see Facebook and Instagram as constantly evolving. And for the time Facebook has actually been around, it's done a decent job at maintaining its relevance. I can't really think of any websites that I was actively visiting in 2009 that I still go on regularly today. And the way that I used Facebook back in 2009 is nowhere near the same experience that I currently have in 2020. People still use it for communicating with their neighborhood groups, for buying and selling things, and seeing what that person who you haven't actually seen for the past 10 years are doing with their lives. None of these things even came close to existing with MySpace. So back to Facebook's stock itself. Today Facebook is trading at $244 per share, or a market capitalization of $696 billion. I would consider Facebook over the next 10 years to be able to grow at 20%, but because I want to price in a little bit of risk with Facebook, just because I don't know how this is going to go exactly for the next 10 years, I'm going to drop that projected growth rate down to 15%. Now just so you guys know, I'm not predicting their future growth based off of any type of formula or mathematical calculation. I'm just seeing what they've done for the past 10 years and I'm trying to take a guess at where they're going to end up in the next 10 years. If anybody out there says that they have a mathematical formula that can do that, good for them, but I bet that their guess isn't much better than mine. So I think at a 15% growth rate, the appropriate PE ratio is 38. Over the past year, Facebook has earned $6.95 per share, which puts its valuation off of trailing earnings at $221 per share, or 10% below the current price. If we look at its current forecast for 2021, right now Facebook is projected to earn $9.72 per share. This is a huge earnings per share jump of almost 40%, especially when you consider all the pressure from the ad boycotts that are currently going on. Personally, I think it's possible that this number is a little bit aggressive, so I would be a little bit cautious about using its forward growth as a great projection of its future value. But if this forecast is accurate, that puts them at a valuation of $370 per share, which is a 51% upside from the current price. So I would consider Facebook a decent buy at $244 per share if you're going to hold it for multiple years. If this price goes down, I would definitely consider being more aggressive and buying more as it goes down. This stock has been very volatile, so I expect opportunities to come. Just earlier this month, when all the boycotts were first announced, the stock price had actually slipped down to $210 per share. So if you had a budget that you were planning to spend on Facebook, I would not consider putting the entire budget in right now. I would be okay with putting some in, but I would wait for good opportunities for when the price dips to get more. But the price is good enough to buy some if you are interested in their stock. And for full disclosure, I currently own shares of Facebook. I've owned them for a while. I plan to continue to hold them for multiple years in the future. I have no interest in selling anytime soon. If you're interested in buying Facebook stock, I recommend doing some additional research in addition to watching this video so that you can decide for yourself if you really want to buy the stock. And if you've made it this far, please consider subscribing and hitting the like button. It really helps out the video so I can keep making videos like this. And in the comments, let me know if there are any businesses that you're interested in me talking about in the future. Thanks for watching.